The current account deficit is going to be a big talking point, not just in the chattering classes here in Delhi and Mumbai, but also certainly for the markets. Here in our studios, Dr. Nalin Mehta is the author of The New BJP. Gaurav Chaudhary is co-founder and CEO of Earshot Media. Tapti Ghosh, partner of Deloitte India, is there with us as well. Saket Mishra, economist. Yamini Iyer, Center for Policy Research. Gurcharan Das, senior economist and author, is there as well. Saket, let me come to you. I think taking off from that point that gentleman outside Dalal Street made, I think both on the fiscal deficit, which we talked about, 6.4 is the target that she said. Likely that she will meet that, not breach it. But the current account deficit, I think it was 4.4 if I'm not mistaken, the last that we got for April to December numbers, quite high. And the fact is that ultimately the current account deficit is just helping you service your debt. It's helping you, with your crude oil imports and so on. We can't afford that to be higher than what it already is. What signs, what signals are you expecting from the finance minister to try and reduce the amount of CAD, simply because the government can ill afford, after all the hard work of the last 2 years, to let that run away?
Zaka, I think the CAD itself is going to be determined more by external forces. I mean, how long Russia-Ukraine lasts, what is the disruption to oil and even sort of food grain prices globally in the world. And second is the level to which our developed markets are going to, the demand from there for our exports are going to get reduced. So I think it's largely going to be determined by outside. Where I think she can actually make a big difference is in maintaining discipline over the factors that she can control, which is how much the government spends. And second piece is taking steps to actually build on this coming out of the woods story, which is improving things like logistics and reducing logistics costs in our economy, so that some of the losses that we see. So if we can reduce logistics costs from 15% to 10%, that itself is a huge thing. And similarly, looking at things, whether it's alternate energy and giving fillip to those, each will be aspects that will allow our domestic economy to become ring-fenced from some of these external impacts.
Yamini Iyer, taking the 30,000 feet view, as it were, when the pandemic set in and you had all of these supply chain disruptions, a lot of, let me put that to Tapti Ghosh if she's there. A lot of countries, a lot of MNCs started realizing that you can't be so overly dependent on China for your supply chain. So today, for example, Apple is hoping to manufacture here in India. Samsung is already manufacturing here in India. India is well on its way to becoming the second largest hub for mobile phone manufacturing, the third biggest manufacturer of auto components. So the real sort of, let's take a 10-15 year horizon. What do you expect the finance minister to lay down in terms of the foundational elements so that India can be that China plus one? Because countries and companies around the world have realized that you need a China plus one strategy.
So we are already on that path, Zaka. The PLI schemes in several sectors have been announced, and there's been quite a beat in the market on that. We're expecting more to come in over there. Manufacturing will have a focus. It's to do, I mean, if you're trying to compare ourselves with China, there has to be scale, there has to be focus in terms of, say, semiconductors, areas where there is a demand in India, there's a demand for export. All of that will need to be focused on. So and then of course there is employment generation through manufacture. So Apple, of course, is manufacturing for a long time. There's a lot of outsourcing into many of the Indian manufacturers as well. So it could be for MSME categories. There are ancillary industries as well. All of that can be given a boost, and then it's a multiplier kind of an effect.
All right. Abik Barua, Chief Economist and Executive Vice President of HDFC Bank, is also joining us. The big numbers, of course, and I am presuming that this will be what you will be watching out for, the fiscal deficit, not just whether it's met the target of 6.4 or whether it's breached it this year, and of course the glide path towards making it 4.5 by FY 25-26. Do you expect the finance minister to stick to that after having put in all the hard yards during the pandemic years to now, loosen the purse strings? Would that be a negative for you?
Absolutely, and I think being a, a banker, I look very closely at things like interest rates and government borrowing costs, and we at this stage we can't afford to let that kind of poop the party because uh, if the um, uh, if the fiscal consolidation is seen to be inadequate, then what will happen is that effectively your interest rates are going to move up because there would be a feeling that the government is borrowing too much and potentially crowding out any private sector investments that might be sort of slowly gaining ground. So I think it is important to consolidate. We've had the sort of the reason of the pandemic to loosen our purse strings, although did much less than the other countries. And in retrospect, it seemed like a very good strategy because we don't have the problems that, say, some of the developed countries have of high inflation and so forth because of their large fiscal stimulus.
Yeah.
And I think there has been a conscious effort by this government to change the narrative away from the budget as a source of largesse to more sensible, prudent, targeted spending.
I want to get in one more word from you about, same time last year when the budget was presented, if somebody told you that inflation management is going to be the single biggest thing, the story of year 2022, we would have all laughed because, nobody was worried about inflation management same time last year. But then the Russia-Ukraine war happened and everything changed. And we've had, 3, 4 rate hikes by the RBI. The Fed has been going on a rate hike spree. Do you think the worst of the inflation story is behind us? Or is there still some more cooling off that needs to happen?
I think some more cooling off needs to happen, although I believe that the worst is behind us. I think the big risk on the horizon is China. And if China sort of starts roaring again after it sort of gets past the disruptions because of the recent COVID wave, then it has started to sort of influence commodity markets and so forth. So things like copper prices, steel
Yeah.
prices are up because of that. So we could see inflation coming back. But I don't think it'll sort of go back to the kind of levels that we saw in the middle of 2022, which means two things that the RBI or other central banks will not tighten as much. But the flip side is that given the inflation risk, they cannot afford to take their foot off the gas.
Correct.
So you will have, as Governor Das recently put it, high for longer in terms of interest rates is what we're looking at. So if the government doesn't consolidate much today, then interest rates will given the scenario, market determined interest rates like government bond deals and so forth will start moving up, and that's not good news.
All right. Dr. Barrow, thank you for joining us. I know you're there with us only very briefly. Let me also get in our political guest. Anshul Avijit is joining us. Anshul, you look at the situation in, some of the far more developed economies, whether it's the US, the UK. The UK is already in recession. Wouldn't you at least concede that for the last 2 years, when there was the temptation of, really loosening the purse strings and directly putting money in the accounts of people, there was restraint shown by the Modi government. There was fiscal prudence shown by the Modi government. As a result, today we're in a good position. We will meet the fiscal deficit target. Tax collections are extremely buoyant. There is some amount of fiscal elbow room to the finance minister. And therefore, India is in a far better wicket today than many of its far more developed peers and counterparts.
No, precisely the opposite, Zaka. I think this is where the government went fundamentally wrong because the fiscal stimulus, ours was the lowest among all G20 countries. It was less than 2% of your GDP. Others went to 4, 6, 8%. Yes, it led to inflation, but there was a humanitarian purpose to the fiscal deficit. You were trying to help people at a time of extreme crisis. Now, you can't take that as a boon. No, we held back on our spending so that people could get poorer. There could be masses of unemployment. Look, here there is a binary that is being created between fiscal conservatism and populism. Populism is usually, the word that I've been hearing all around pre-budget analysis is that populism is a terrible thing because you're giving money to the poor, and that's, breaking our budget, it's leading to high fiscal deficit. I mean, that's an absolutely wrong way of looking at it. There is a fundamental problem in which our economy is being approached, Zaka. The finance minister is trying to coax private investment for the past 4 years. It has not worked because supply side economics does not work. It is demand that creates supply and not the other way around. This is old neoclassical theory. This is Say's law, which has been rejected, but the government is sticking on to it.
This is also a part philosophical debate. We'll get to that in a second. I just want to point our viewers to what's happening on the screen, which is that the markets have opened 400 points up, just a shade under 60,000 is where the Sensex is right now. And the Nifty at 17,700, again, over 100 points up. So about almost 0.7% up are the markets. And Gaurav is here and he's tracked many a budget. Is there a correlation? If the markets are in the green before the budget, where do they end up?
Yeah,
or is
generally,
there
the markets are in the green before the budget is presented. We probably see a bit of plateauing, depending on what the announcements are made in the budget. But for the markets, the good news will be if there is no bad news in the budget. That is one. And second,
what would be, like, for example, the gentleman outside Dalal Street who said both on LTCG
correct.
as well as I think on
there is a lot of
CAG.
expectations around LTCG that the government is going to do something to standardize LTCGs. Our LTCG structure is extremely complicated.
Okay.
Too many layers, too many asset classes, too many rates, and too many holding periods. I think there is a lot of expectation that this will be standardized and simplified, and it's about time that we do that, because we are chasing global capital, particularly if we are trying to make India a hub for global capital in this region, in Asia. Then I think it's about time we fix those. The market will be disappointed if that is not done. The other thing that could probably disappoint the markets if that the government actually goes ahead and deviates from the fiscal glide path, and it says that we are probably not going to meet 6.4% this year, and also deviates from the 4.5% medium-term fiscal policy framework. That is something that the market is going to take it very, very seriously, because that means there'll be extra government borrowing, which could crowd out private borrowing from the market, which is something that the market is not going to expect.
Yeah, give me a moment. Rajneesh Kumar, former chairman of SBI, is also joining us. Mr. Kumar, thank you very much for speaking with us. What will be the big sort of meta narrative as far as you are concerned that you'll be watching out for in the Union Budget 23-24? It is also a political budget, as we've been saying, because it's the last full-fledged budget before the election. But given the fiscal prudence that the government has shown, particularly in very hard COVID years over the last couple of years, do you expect the finance minister to continue, for example, what Gaurav just mentioned a moment ago, the fiscal glide path that was put out in the budget last year to 4.5 FY 25-26? Do you expect the finance minister to reiterate her commitment to that?
Yes, because we have to see that in what context and in what circumstances the current budget is being set. So one is that the geopolitical situation because of Russia-Ukraine war, it has not changed much. And the inflation because of the import of energy. So that is one thing which cannot be ignored. The second is, yes, it is a budget before the elections of 2024. So definitely for any finance minister, it is a very difficult call. But given the track record of the current government, it is a natural expectation that fiscal prudence will continue. Luckily, there is a buoyancy as far as the tax revenue is concerned.
Correct.
And the need to control inflation, which has emerged as a big issue, not only India, but across the globe. But because if we are in an election year, then obviously the government will take such steps, hopefully, to have the government borrowings under control. Otherwise, there will be an upward pressure on the prices, which will not be good for the country, and whatever has been achieved through monetary policy, it will be negated.
I also want to ask you,
circumstances,
Mr. Kumar, about exports. We had a record year last year. I think we touched an all-time high of 400 billion plus in exports. But just in 22-23, it has softened a bit, particularly in the last couple of months, October, November, December. It has softened, and the outlook seems that it will soften further. So, for example, in the month of October, November, both of those months, exports have declined anywhere between 10 to 15%. And imports have been pretty much there or growing at 5 or 6%, and that's largely because of oil. I want to know from you, how much of a concern would that be, given that, all over the globe, people are talking about recessionary tendencies?
Yeah, so that is the factor which is impacting the exports from the country. And some of the people which I speak to, so there is a decline as far as their order book is concerned. PLI has been a successful program, I would say, where it has incentivized the manufacturing in the country and export. So we will also have to see that whether there is an enhanced allocation under PLI. But if rest of the world, it is expected to grow at 1%, 1.5%, then obviously there is a issue around demand.
Okay.
And that's where the manufacturing sector exports in particular, there is a downward pressure. And I think PLI is something which we have to watch out that how much allocation government makes and whether any new sectors are covered.
All right. Mr. Rajneesh Kumar, we'll leave it at that. Thank you very much for joining us, the former chairman of SBI, on what he will be looking out for in the budget speech. Like I said, in about an hour and 40 minutes, the finance minister will rise to present the Union Budget 2023-24. It is an important policy announcement, not just for economic reasons, but also for political reasons, because of the electoral implications both this year and in 2024. Quick break, but when we come back, we'll have live pictures also of the finance minister meeting the Rashtrapati, and then subsequently closer to 10 o'clock, she will reach the Parliament building where the Union Cabinet will give its stamp of approval to the budget. Quick break. We'll see you on the other side in a minute.